And joining us here today on the program, got to talk about this wild day in the markets. Mike Miner with Professional Ag Marketing joining us today. And Mike, it's great to catch up with you again, man. How are you?
I have been, I've been all right. It's been active market to try to keep up with, anyways. And it's been a good summer so far here. We kind of escaped through the weather last night. Okay, didn't blow away completely. Got some flat corn, very variable rainfall events, but we escaped through all right for the most part. We were lucky it wasn't 10 days later, just to say the least.
Yeah, I was gonna start with that. I knew you were right in the path of that derecho, and you kind of hit it there a little bit. But the way it was shaping up yesterday afternoon, it was sounding like it could have been reminiscent of what we saw a couple years ago. I know there was maybe a little more damage out central into eastern South Dakota, but other than that, it seemed like everything kind of fizzled out, and it was more just general thunderstorms yesterday, Mike.
For the most part, we had a lot more damage in the first one that came in through, earlier this year with more grain bins, machine sheds, stuff like that, that really got wrecked into South Dakota. So pretty much anything that was going to fall had already. So a lot of trees, but flat corn. And well, it wasn't 10 feet tall, so we're fine for now, anyways, and not a ton of hail. So got okay. Some really major areas got 5 to 8 inches of rain, which that's never that convenient, but not too bad anyways for what it could have been or was made up to be.
Very true. Well, staying on the weather front a little bit before we really dive into these markets specifically one by one, it almost feels like some of these rains that we've gotten in some areas, it's almost feeling like weather's turned a bit bearish here in the grain markets. Would you agree with that, or what's your thoughts with how the weather's shaping up here just the last week or so in the market trade, Mike?
I can say that as well. I agree. We've had some bearish rainfall here actively lately, especially in eastern Iowa, northern Illinois. That area had popped up on the drought monitor a little bit. So some of these last rainfall events really helping out those areas. The traders love to trade out of their back door in Chicago there. So nice to see rainfall fall in that area as well. But that north eastern area of Nebraska continues to be a little bit of a concern. They didn't quite get enough rainfall here in these last couple, so we'll need to see a little bit more the rest of the week. But the majority, you're going to care about the I states mostly, and I would say their weather's been improving quite a bit lately.
Well, now looking a little bit closer at our markets, as I alluded to this earlier, it was a volatile day. I mean, we started overnight into this morning. It looked like we're going to have some strength. And then it's like, uh-oh, here we go. The bottom's coming out again. But then it felt like maybe some more end users stepped in and bought the break again and moved us back to mostly mixed positive territory here. Quarter beans, we'll call it a little more mixed bag in wheat today. But overall, ended up a lot better than it looked here about 11:30, noon, 12:30 here, Mike.
Yeah, and I was a little worried going into this day that we would continue to see some of these dead cat bounces, and we keep seeing it around these crop conditions getting lowered a little bit. We saw it last night again come out a little bit below expectation for both corn and soybeans, and we are trending now below the 5-year average for those months, so it is sliding a little bit. But I'll tell you what, it still isn't that bad. Like you said, we've seen some bearish rainfalls here hit lately, and really the momentum has really pushed these corn and soybean markets lower. And I think a big part of that to focus on going forward will continue to be the fund activities and their general outlook, because you're looking at 200 plus contracts, 1,000 contracts of corn longs still in this market, and 117 or so of soybean. And you compare it to a year like '08, a lot of people you'll hear starting to talk about, well, that's been enough, or the market's gone down enough or taken off enough, it's oversold technically. You get a bounce like this, and all of a sudden you look and it's like, holy crap, we just took off $1 in 2.5 days. And in '08, that was a very similar situation. We've had a really strong correlation to those charts from back then. So that is something to keep perspective in these grain markets, because right now they're acting like any other summer. We get a couple heat worries, and then we get some rainfall, and then all of a sudden the July 4th holiday rolls around in the 3-day weekend, and all of a sudden we've dropped off our highs, and guys are wondering how to get their sales back, basically.
Well, I'm glad you brought up the funds and you brought up how the market's, acting like a traditional weather market. It feels like some of the move has been accelerated and maybe, amplified by some of the algo traders, some of the computers. We've touched on that. And then obviously the recession worries and the fear in the stock market. That's really kind of been the elephant in the room. And, when you amplify it with a computer that's trading headlines, next thing you know, like you said, we've lost a dollar and a matter of sometimes hours. And
Yeah.
it definitely makes for a volatile market environment to try and operate in, Mike.
Definitely. When you see things like crude oil down $10, that is not helping out the corn aspect because of ethanol or soybean oil, which has been such a nice support area for soybeans through this rally. So when that started to really slip away here, that's taken away some really solid footing for both of those commodities.
Now, looking at the corn market specifically here, Mike, we see a decent number on the board here at the close today. Basically, $6 in September, 5.85 in December. I know that's not where we were 2 weeks ago, but for guys who are maybe looking at that and going, well, I didn't sell enough up at the top, and now I don't want to sell because it's pulled back. To me, that's still a pretty fair price for new crop December corn, Mike, especially on top of that, if you have a better idea what kind of crop you have in the field now.
Especially if you know what you got in the field, and that helps a little bit. But when I look at the numbers, a lot of break evens are coming around at 425 cash on corn. So that gives you quite a bit of room back to that number yet. And when I look at crop insurance levels, when they got set at 590 back in February, at an 85% level, you're pretty much sitting at $5 for that to kick in for a lot of these products. Now, things like margin protection, they're probably kicking in closer to $5.50 because of the additional input costs. But when I start to look at it from that, I mean, if you're looking at 80 cents until crop insurance kicks in, it's not too late to continue to try to get some of those sale averages up a little bit or catch up. And if it is, and if you're worried about upside, that's where a put call strategy, buy a put, sell a call, something like that could come in, just leave you a little bit more upside if you need it.
Soybeans, kind of the same thing. I look at September, August contracts, still holding some decent value. New crop November, 13.22 and three quarters today at the close. I mean, still kind of the same thing there. Soybeans, maybe the difference with beans versus corn is, this is the key time frame for corn pollination into July. Beans, we still have a little while to really have a better idea of what we're going to have for a crop this year, but still, it feels like some of the same things to think about there as well.
We do. And with soybeans, I see a little bit of a gap there that we left between Friday to Monday, 60 cents higher around that 1380. So they're close enough to that where we may look at that again if we have some weather premium put back in this market or additional China buying if they don't cancel them all first, things like that. That could help us out on the soybean front just a little bit. But I would say from that perspective, $11 cash break even, something like that. A little bit of a gap there yet too, but you're already a dollar lower than the insurance premium where that average is set at there from February. So something to keep in mind there as well. But like corn, that one's not going to kick in for a bit yet either. So keep that in mind.
And with corn and beans as well, cash basis, one has to wonder if cash is going to start to erode along with our futures trade. What are you seeing for basis in your area, Mike, in correlation to the futures market right now?
Yeah, so interesting would be Valero in our local area here, Aurora and Hartley, some of the local areas. They're trying to pull the basis down a little bit. They're probably 50 to 70 cents out of the market. Ethanol plants are in a nice spot when it comes to managing things like, well, I can just slow down on corn grind a little bit. I'm more efficient anyways. And if I can just make it to new crop, then I got a lot more coming in. So they don't have to make it necessarily either. Like if I got pigs to feed, I'm in a tighter position today. But once these guys get just enough corn to make it to harvest, you're going to see them back off those September bids quite a bit. And when that happens, obviously we don't know when it will, but guys will figure out at some point they'll have just enough to get there. And then it'll be a free fall on the basis side because we rolled into these September levels at a huge inverse, and they're carrying some really strong basis levels that could disappear quick. So it's going to depend how much corn's left in the countryside when August starts to roll around, and it'll be location specific on that and how the grind is doing up until that point.
Mike, let's switch gears. Let's talk the wheat markets here today. Look into the closes. Yeah, we ended up finishing mixed to lower still in the wheat market as we see winter wheat harvest a little over halfway done as of July 3rd. Spring wheat crop condition ratings looking pretty solid, especially compared to last year with the drought, but still looking good. But this wheat market, this is, I think, 10 or 12 sessions in a row close lower. I mean, it's just not looking very good. We pretty much taken all of the Ukraine war premium out and then some here in the wheat market, Mike.
Exactly. And you're seeing outside money flow really hit that one as well. It's been one of the most underperforming commodities, in my opinion, with everything going on between spring wheat and then the inflation talk, global food security, and then the Russia Ukraine situation. That market's just been a huge underperformer. Like you said, it took out all of the Russian Ukraine premium now. And the winter wheat crop is looking okay in the South compared to what it probably could have been. Kansas yields coming in okay yet. The spring wheat thing, yeah, there's some question marks yet with that, and the lack of maturity there, how many acres, etc. But yeah, I think the majority is just that money is pulling out of that market in a really strong way, and no one's going to be willing to step in to try to stop it or buy it in the meantime, especially at the time of the year we're in on these grain markets. And that's something I think that is a huge talking point right now. Is just you're at the first week of July. I mean, if you're going to try to stop these funds from getting out in any significant way, you're going to need some bullish weather premium. And right now, it seems like we're starting to get a few more of these rainfalls around key times. And we're just going to need a little bit extra something to give these markets a boost.
That's a great point you bring up because you look at the supply and demand fundamentals, they still maybe lean bullish, but we're in that traditional weather market period, as you alluded to. And it's something that, going forward until there is a reason to put some bullish momentum into the market with, maybe drier weather, if that forecast ends up happening later in July and August. Until that happens, it feels like we're maybe just going to probably drift here once we find that support level, Mike.
And when it comes to supply fundamentals, I'm really looking at if you get a 180 plus corn yield on this thing and you're back to trend, you're back to 12 to 13% stocks to use ratio. And that's pretty much $4 corn historically. So that puts you into perspective on corn. And then soybeans, if you add these acres back that we figure we may find in the resurvey, you're going to be back up to 300 million bushels of ending stocks on that as well, which is a little bit more normal. So the funny thing is about these supply and demand fundamentals is they can move those in a pretty fast way sometimes.
Well, and as well, something else that's been a weight on the markets is the dollar. 107 today, the US dollar. And traditionally, when that dollar's going up, it's weighing on our
Yeah.
grains, it's weighing on our commodities. And that all ties into everything else going on with the recession fears and just all the outside market pressure. But just watching that dollar continue to explode to the upside, I know is a concern for the markets overall, Mike.
Yeah, it's getting used as a safe haven. Like you said, it's really hard on U.S. origin exports, highest it's been since 2002. There'll be decent resistance upon it, I think, here coming up. Talks of inflation stopping, or maybe the Fed will be done after this next rate hike. Talk like that, they'll take a little break. But maybe it's done enough in the time being, and the market's working the way it should. And if inflation stops, that'll help quite a bit on that aspect.
Let's move over to livestock trade, Mike. Hog market last couple of days. Whoo, finding some
Yeah.
support there. I know cutout was up sharply yesterday and today getting a little support from that cash market, but front month hogs, triple digit strength being seen there. Walk me through what's going on here. Did we just have a overabundance of use over the 4th of July? Is it a demand issue here that's kind of leading us back to the upside this week, or what's going on?
Yeah, so a lot of talk has been about strong pork cutouts and higher cash yesterday. Really should set the tone for the rest of the week here, and especially as we got through this demand for the holiday, it seems like it was pretty strong. And Packers should remain decently aggressive to fill things back up. We showed pretty decent cash trade, 125 to 127 here today out of the cash trade, which is well beyond where the futures have been. No surprise there with how that's trended lately. But livestock traders have turned more of their attention as hogs had decent potential for the upside here moving through this inflationary period, and really have a decent ways back to some old highs. And we have some room to run there if it wants to find it. We did put in a gap on that August that we might want to go fill later as well. But demand was a problem up until this point, so cutout's just doing what it needed to do. The cash is kind of a bonus at this point, but I don't know how much that'll even matter here. As you talk more about the bear side of things, Packers were aggressive early this week. Maybe they've got enough, for the time being, so they may pull cash back, which may take a lot of wind out of the sails for these futures markets. And then we did see some pretty strong spread trading as well recently, so keep an eye on that.
Now, on the flip side, the cattle market was higher today, but it feels like cattle to me are getting pulled along this week by the hog market. What are your thoughts in cattle here? Especially you look at fat cattle. I mean, we're talking 130s August, October, 145 December, and then not to mention 170s in the feeder market. But what's your thoughts with this cattle market overall here this week, Mike?
Well, the August futures still remains at a pretty significant discount to the cash market, but that's no surprise. July, we saw the same thing heading into this month with the front month futures, which was a disappointment with where that kind of settled out at, closer to where the South had been, anyways. And we still see that massive spread between the two, and so that's been a friendly fundamental that just hasn't really grabbed hold and pulled us higher quite yet. The potential is better, longer term for lower grain prices, so that should help as well. And good crop conditions still, for the most part, they're on the downtrend, but the outlook is for good weather, so that'll help a little bit too. Give some feedlots a little bit more confidence, and it should help on that aspect. But the cattle complex, in the same thought, has just failed to gain strength from lower corn prices on the setback, and I think that's a little uneasy. But one of the main problems that we've seen with the pork market as well is the box beef continues to struggle, and it's unable to find support even after the holiday weekend here. So that gets me a little bit more worried. But longer term here, I think you look far enough out, you'll start to see more friendly things on this cattle market.
And as well, Mike, you mentioned crude oil earlier. I know everyone's watching that closely. Farmers are wondering, are we going to see a break to where I can lock in some diesel or whatnot? We're watching at the pump to see if prices come down. Crude oil working to try and close below $100 here today for the first time since April 11th, I think. I mean, this crude oil market, it almost feels like that's pricing in this recession fear as well, and maybe some more shutdown talk in China. So you look at crude. What are your thoughts there?
Yeah, so the real question mark is recession or not. You go into a recession, you probably pull back to 65 bucks. Somewhere in there is what people continue to talk about. I don't think 80 stops it. You're close enough that that won't cut it. I think it'll pull back into the 60s. But the major problem still is concerning with just the fact of this red tape around the production aspect. And longer term, we're still going to continue to increase the consumption of oil within the United States until we majorly switch to electric vehicles or other alternative energy sources. And that concept is going to be a problem still for the next 5 to 10 years until we see a massive transition over. And in the meantime, these oil producers are going to still have that hanging over them, so they're going to want to shift more of their capital into those alternative energy resources for production. And right now, you just don't have any massive expansion in that industry, even with $100 plus crude oil. So it's really it's concerning going forward. And I think in the bull camp, you have a good case for longer term here for the next 5 years or so. But up front here, recession or not, 38 to 40% chance of a recession is what the economists are calling it today, and I would see that pulling below $70 if we do see that. So that's kind of what I'm looking for. Most people would say you're looking for the fall Q4 timeframe. You'll probably know about more about that situation. You've seen gas pull back quite a bit here in the last month on prices. So I would say to give it a little bit more time and see what the overall global economy is going to give us.
Fantastic stuff, Mike. And I know if producers need a little help with their marketing plan, trying to navigate all this volatility and wondering what to do as they work through the summer and beyond, I know they can reach out to you and the team there at Professional Ag Marketing very easily. How can they get a hold of you guys, Mike?
Yeah, go to our website at professionalagmarketing.com or go to give us a call at 507-449-2030. And we're located in Southwest Minnesota here in Laverne. And if you ever stop through, say hi, and I'd love to meet you.
Well, we appreciate the time as always. With that, Mike Miner with Professional Ag Marketing. Find them online again, professionalagmarketing.com. Mike, have a great one, sir. We'll talk to you again soon.
Thank you.